welcome to McBoss Capital. My name is Michael Chu. This is a US market recap video for the week ending October 17, 2025. Last week, Nasdaq Composite had a really down day on Friday, and this week we actually were able to bounce back pretty nicely, surprisingly, because we have a couple of distribution days this week as well. So that being said, we kind of in a neutral zone, I would say. But again, just looking at this, we are um, in a very long-term uptrend here. It looks like it's still going because we haven't really break the red line here. So that is the key here. It is the longest rally since like bottom of 2022, and I think officially now we passed 3 years in this bull market. So very strong market, and right now this is the strongest rally. A lot of people are saying this rally could last at least till early next year just because no one wants to sell right now for tax write-offs, tax purpose and stuff. So most people will most likely wait till New Year to take some gains as they want to prolong that taxation. So whether that's true, I'm not sure. But anyhow, it looks like the market has weakened in some ways because we're seeing growth stocks actually deteriorating more. I will be doing another video of the growth stock list I follow, so please make sure you follow that one after this video comes out. And right now we can see on the daily chart, the 10-day average, moving average green line is basically around this zone right here. And we actually, if you look at the days that the last 6 days here, including Friday, we see more days trading at the bottom of the range, right? Versus at the top of the range. So from that perspective, this is more negative, right? Because we're still trying to come back to the top range, and we haven't seen that, right? So that is the negative, and growth stock. I think a lot of them have got hit hard. Not all of them. There are still some running, and so that is kind of the story behind what's happening right now. Some people are also saying there's probably the market might go sideways for a while until like a lot of these issues like the tariff issue with China and U.S. tension kind of dissipates, as maybe they'll come up with some agreement. The government shutdown, maybe there's some potential resolution there. There's also obviously latest, some smaller banks have some issues with some loans, right, on the auto business side. That's what you're hearing on the news right now. So maybe those will be clearer as time goes on, and maybe there's not too much issue in the loan area, in the private credit side. So yeah, so there's lots of issues happening, and maybe that it's gonna take some time. I don't know, when it will get resolved and whether this market will keep going sideways until those things are resolved. Or the one thing you can see here, the red line, this is the 50 days moving average. It's getting closer now to the price level. This is probably like pretty tight, like right here. It's probably narrower than this at this level here. And the last time we got close to the 50-day was this three pullback here, and now we're getting closer as well, right? From the current level. So, but like I say, I think the negative is that it's still trading at the bottom range. It could test the 50-day. We haven't really crossed below it once yet, so that is the key here. Like I think it might have to test that to show that hey, it may be able to bounce back from that, and that might be a good thing. But who knows? I don't really know what happened. S&P, very similar chart, also bounced back this week, despite again, yeah, let me show you the distribution days on the daily chart here. So we have this big down day on the Friday previously, and then here we have, this one avoid a distribution day on S&P, but it was a distribution day on Nasdaq because it was down only less than 0.2% here. But on Nasdaq that day was a distribution day, and then on Thursday we have a distribution day as well. So, again, generally when you see really short time period where there's distribution days, that's usually not a good sign. In general, like most markets, top rallies, kind of dissipate after we see several distribution days. However, if those distribution days doesn't give up too much price loss, that might be a good sign because you have all this selling on higher volume, and yet the price doesn't come down. That tells you that there are buyers and they're willing to buy at this level. So that's the positive side. So we'll see whether this can hold or not. But like I said, distribution days are always not a good thing, and if they start to power up more, it could really take this market down. And who knows what will happen if it does break the 50-day, right? So that's something that, like I said, we haven't seen since this beginning of this rally. So if that happens, it'll be a very big test for sure. Here's Dow Jones. Dow Jones has been kind of, lagging a little bit. It's been on a down slope. But the funny thing is, like, this one you can see it touched the red line here. It has touched before. Um, the good thing is it's kind of in a pendant formation, right? So it's not giving up too much. It's not uh, coming down hard. It bounced back. And if you look at the range here, lately we're probably trading more at the bottom range, except this one day here. But most of the time it is below the at the bottom of the range. So similar to Nasdaq. So that's the negative again. So for Russell, it also bounced back from last week's big drop. But the one thing I don't like looking at this current weekly chart here is how wide the range is on the week. So 2 weeks in a row we have a very wide range, right? Um, and if you look carefully, like both weeks we kind of at the bottom of the range. So this one closed at this level and this one closed at this level. So again, both weeks we closed at the bottom of the range. And again, Russell, I think 20% of them are in the regional bank, which got really hit hard this week, and that's probably what causes the Russell to come back down really hard. So you can see on the daily chart, we went down the week before to this level right here. Then we bounced back really strong this week, like hitting new highs midway through the week. And then, and as soon as you thought things were good, and then it got hammered again and came back down. So right now we're just sitting at the 21-day, moving average right here, and not looking very good right now because the 10 days it could start to slope down again, right? But again, this has been a very volatile index lately, so that's the problem. And the range are really big too, from for each of this pullback again, very volatile, not easy to I think trade any stock kind of belonging to this area. Here's regional bank weekly chart. Like it looks very terrible right now. It actually undercut the black line here, and this is probably a big risk to the market right now because the funny thing is the news was out on all the you know private business bankruptcy, right? And some banks who loan those business are getting hit right now. But that news was out like over a week ago. I believe like last week, a week ago, and yet the market didn't react to it until like recently, like just the last day or so. And so I'm not sure why that is. Obviously, yeah, so that really pulled the market down. You can see like, we went from this slope to like literally just straight down. And we did have some smaller bounce on Friday, but you can tell it's not much of a bounce. So that's one bad thing. And then the second thing is we are below the 200-day, and we decisively cut it, and we didn't even come close back to it so far. So that is also negative. Now, things could change if some good news come out, but on Friday, I believe a lot of the regional banks did report, and it didn't really spur much demand or spur a big rebound from Thursday's loss. So that is not a good sign, right? When you ever have like kind of a big drop and then just a small bounce, right? So from that perspective, this is not a good thing happening right now. The other thing we just talked about is volatility. It has really rise. Now Friday it hit a pretty high in the morning, and then it did reverse pretty hard. The one thing that I noticed in this chart is I've been talking about on my live streams how the bottom channel line has been creeping higher, and this started weeks ago, like not just recently. And then even here you can see the slope line on the low channel line it is starting to creep up, and now we just hit almost like a near 30 level, not quite yet, but near 30 level volatility. And so, will this go higher? It's possible, right? Because But maybe we will see, we did see a big drop on Friday, so maybe we would do something like this, right? So we have an initial move here. So again, I don't want to project anything, but I'm just saying watch out for this, right? That's all I'm saying. We may have an initial move like this and then pull back, maybe not exactly like this, but maybe even a shorter version of this. Then it's starting to pull back like this, starting to pull back like this as the 10-day catch up. Again, the 10-day line is right there, and then it can start to bounce again, right? So because we have lots of issues right now, whether you think it's an issue or not, but they're not getting resolved, and if they're not getting resolved sooner, then that could spur more issues, right? So this is just some things to watch out. Obviously you don't want to see huge volatility like this. That would be pretty damaging. But at the same time, you have to wonder why is this slowly creeping up, and the bottom channel line is pretty steep right now. So just want to bring this up. The ETF. So looking at the top 50 growth stocks for IBD, very interesting. We did have another up here. Again, the range is just a little bit very wide right now. Probably the widest range since the beginning of this rally. So generally, when you start having more wide range, it's usually not a good sign. But again, we did see distribution days this week, so let's see how the market continue. Let's look at the daily. Daily, you can see we have two, three down days where it kind of reached this level. Now, the good thing is on Friday, we can see that each time it bounced back, and even Friday we kind of bounced back again. So that is a strong sign of support at that level. So we hope this will, right now it's below the 10-day. It is slightly above the 21-day. So we just hope it will come back up right now. But we don't know for sure. It could be it could also be like just continue the downward movement here and start building test the 50-day and start kind of building a base here, right? So again, the base forming process is very interesting. IBD study lots of bases during market corrections or pullback. When it's strong enough, you will see those bases form. And so watch your stocks, right? The growth stocks itself is most important to look at. The index and so forth, yes, they do represent most of the stocks, but but still, you want to look at your own stock and see, hey, are they forming bases? Are they holding up better than the index? Things like that. Or are they even starting to, maybe some stocks already have corrected quite a bit and now actually coming back up on the right side of the base. So there's some stocks going to outperform the market as well. If this is proved to be a short-term consolidation, maybe there's going to be more opportunities, right, for some of the other stocks as well, not just recent leaders. So usually when there is some sort of consolidation in the market, it usually turn out new leaders after that. So let's see if that's going to happen. CNX yield, it's been going down and looks like it hit a new low this week, below 4%, slightly below 4%. So that is the 10-year yield. So rates are looks like, yeah, it's coming down. The US dollar also go down this week slightly. You can see that on the weekly chart, just slightly, not too bad. This is after a recent gain. So the US dollar does play a big part in the equity. So right now it is kind of just hovering slightly between 10 and 21 day after getting rejected here on the 200 day here. So it is kind of in the middle ground, and it's still in the top range, so it could bounce here, which could be a negative thing for the equity because most equities are global and they do trade other currencies against US dollar. Here's the oil price. Oil price really hit new low this week. This is not a good sign. This is really sharp down right now. So this is a big problem for oil. The goal was just continuing to hit new highs throughout the week, except for Friday. I mean Friday it dropped 1.88%, but many gold stocks dropped like anywhere from 5 to 8% on that day. So we'll look at some of that on the growth stocks video later. Silver got hit hard, down 4%. Hit the 10-day line before it bounced a little bit. Copper also got hit hard this week. You can see it never came back up after Tuesday's drop, I believe. Yes. Here's WENEC uranium and nuclear ETF. This one also took a hard hit, so a lot of the nuclear related stocks got hit hard this week. Bitcoin continued to go down. This is not a good sign. This is like many sessions down now, and not only that, it broke the low like quite easily too. So there's not really much of a fight here. Then it comes to the 200-day black line here before it bounced a little bit. So yeah, overall this is a very sharp downtrend right now. Yeah, let's see how whether it'll go lower than that. Any bad news right now can really put us down a lot lower, right? So that's the problem. Here's Ethereum, also hitting new lows here again. It gives up the low pretty easy here. It gapped down on Friday before bouncing back a little bit. As for next week, we're gonna have the inflation report coming out, and then we have Tesla, Netflix, Genoa, and then even some regional bank reporting. So there's again the earnings season is another big factor moving forward. Like actually probably something that could change the whole dynamic of the market right now if things doesn't go well. So we have to watch for that and see how things turn out. Taking a quick look at the New York West decline line here, uh, you know, again, we have distribution days this week, and since last Friday drop here, we kind of bounced back towards you can see here kind of like somewhat near the middle range, more lower than the middle range, I would say, but it did bounce back a little bit. Um, this one is S&P 500, so that looks not too bad. Nasdaq looked a little bit weaker because you can see even on Friday, it didn't bounce even though the market bounced, right? And same thing with S&P, it bounced just very tiny. So that's not a good sign. So relatively speaking, just not as many stocks are participating in the bounce on Friday based on this numbers here. You can see actually down 1730 stocks up versus 2600 2400, sorry, stocks down. And then on the S&P, it's just very slightly more, 1144 versus 1103. So again, just not much participation in the market right now. And looking at some secondary indicators, this is the CNN Fear and Greed Index. It's interesting enough, there's lots of fear. In fact, it was extreme fear just a day before. And now it just pushed back a little bit to fear. So lots of people are fearing the market right now. So, again, this is a secondary indicator. You gotta look at the index itself as a primary indicator. And right now, as mentioned, we had three distribution days on the primary indicator on the index itself and in the last six sessions. So that's a very negative thing. Now, this sometimes can be counter intuitive, right? You know there's more fear. That means less people are participating in the market, but yet sometimes the market can go up when a lot of people, general investors are fearful. Here's the AAII investment survey as of October 15th. So this was Wednesday. We see that the bullish sentiment dropped significantly from 45% a week before that to 33%. And look at the bearish sentiment. It increased like over 10 points here from 35 to 46. So again, the sentiments are very negative right now. So sometimes this could be again counterintuitive to what the market will do. So I just want to bring this up. Um, but yeah, if the market, if general sentiment is very bullish right now, and the market is showing all these distribution days, I would be definitely more, have kind of, tilt towards the negative side. But because the sentiments are so bearish already, like it almost seems like most people will have sold already. So that's the reason why, it's counterintuitive in that sense. The IBD signal right now is still about 60 to 80% allocation. So on the low side, it will be close to 60, and on the high side, it will be close to 80%. We did see, distribution day Friday ago. That was a really big down day. Now, hopefully, we don't see that day again anytime soon. But this week, we turned out another two distribution days, and that's not a good sign. And you can see the accumulation distribution has turned negative as well by the end of Thursday and Friday. It was positive slightly on Tuesday and Wednesday, but then it turned negative So there's more distribution in stocks than accumulation. And same thing with the industry groups. It's now more distribution as well. On the sector side, on like really, there's not many big numbers here. This is net number of stocks under accumulation minus the number of stocks in distribution. And so overall, we see net neutral here on technology. So there's it's almost the same number of stocks being accumulated versus distributed. Um, and then just slightly positive on the retail, negative on the industrial. Health actually doing much better than other sectors this week. And then you have commodities come down. It was doing well until Friday. Again, many commodity stocks got hit hard on Friday. And then financial, really bad on Thursday and Friday because of the credit news and stuff. That is a significant number of stocks in under distribution. So not a good sign. And financial, you can see in the last 4 weeks, it's just been terrible, very terrible. And even with some good banks reporting this week, they just didn't spark the whole market at all. Chart, sometimes you want to avoid the noise, and looking at weekly chart will help do that. And so we see that we have a down week last week on Friday, a week before, and this week we actually closed at the top of range, and near new high actually. It is a closing high, so that is impressive considering like the turbulence in the market right now. So I do think like the chips are still one of the top areas in the whole marketplace that show strength. And if they do fall, I would think the market will fall along with it because it's just such a very strong impact. And of course, the AI story is still bringing this sector up. And we see some of the distribution days didn't really impact, other than last Friday move, which bring it down to the pink line 21 day. Other than that day, like you can see, even the turbulence this week didn't really pull this whole group out very much down, right? In fact, as I said, it's new highs again. So that's just incredible strength. Uh, I would follow the same momentum towards the end of the year if it still continue with this trend. I mean, there's nothing that stop it from going. It could still continue to go. Now on the Let's take out my markups for a second, so it's just easier to read. On the stock side, like Nvidia is not doing as well because it came down on last Friday before, and it just kind of formed this L-shaped pattern, right? You see this sideways pattern on the top, and it just couldn't even come back up above the 10-day. So this is where like I find the market confusing, right? You have the whole sector we just saw on the SMH doing really well, but yet you have the leader of the whole. I think a lot of people consider Nvidia the leader of the chip area, and yet it's not doing much. So very confusing market. So not all are equal. So that's the problem right now. And then we see here AMD, one of the stronger leaders in recent, since this one big down update here. Sorry, one update here. And look at this channel line at the bottom. It just continued to rise, and even on Friday, it tried to come down. It just couldn't. It just bounced back again very fast. So it just showed that this just wants to keep going. A very strong stuff. Here's Broadcom. It tried to come up a few days right here, and then it got knocked back down on Friday. Um, that's the problem right now. The market is really choppy. So even you find the right stocks showing some potential momentum, and then boom, it just get knocked down so easily. And I think this could continue until this earnings season. Probably like the next 3 weeks it's going to be very hot, and it's going to impact many stocks depending how some of this other stocks going to report, right? Because usually when one chip stock report, it could impact the whole other areas. So we'll see. This is not, again, I just don't like the choppiness. We see this here and here, like it's just happening constantly. So it's very hard to trade some of these stocks now, I feel. Here's TSM. You can see it tried to make a new high on Thursday, and then it got knocked back down very fast. So it's very rare that this mega caps here, they're all showing weakness right now. That's the negative sign, right? Again, on the SMH, you don't even notice that because it's just near new high. But yet, this mega caps here, this four I just showed you, are all showing weakness right now. It's very, very confusing market. Now, that being said, there's probably other chip stocks that are maybe doing better, but I'm just saying these four mega caps are huge and yet they're not showing good signs. Now, maybe the mega caps are kind of lagging right now, so maybe that could be the reason. So here's IGV. Software group hasn't done well for a while now. It's not like breaking down hard, but it is slowly coming down. After trying to break out here and it didn't work, and it just slowly coming back down. Right now, you can see is that the red line again. Red line is very key for institution, especially for stocks that are mega cap. They tend to be the any strong growth stock. That's where the line of support is usually. If they don't support near that line very quickly, usually it will fall pretty hard. As more sellers start to sell right as it drops. So that's always the tricky thing. When it comes down to 50-day, it could accelerate if it breaks that. So that is the only tricky thing. Microsoft coming back down again. This looks very much like a hell-shaped pattern. I don't like seeing this right now. I'm seeing this happening in many mega cap stocks, and that's not a good sign. Google looks really good here. It bounced on Friday. Um, and at the top of the range and able to close at a new recent high here. I'm liking this chart a lot. Very tight base. Tested the pink line here once already and bounced back. Very strong chart. This is definitely one of the strongest mega cap chart right now. Amazon continued to go down despite their prime days and so forth. Didn't really make it didn't help them at all, which is very interesting. And look at this. It just broke the 200-day. That is not a good sign. So I'm gonna, again, like there's lots of talk about the retails area getting hit hard, and it's one of the weakest area recently in the stock market as well. So if you look at SRT, retails, it bounced back. Look, this one bounced back a little bit here, but it's still below all the short-term moving averages. So it is on the downtrend right now. Looking at discretionary, also similar. It's still kind of below the downtrend line. Here's Meta. Meta has been kind of on a downtrend, but it's very interesting. It's trading really tight right now. That's always a good sign because it just shows that despite again this week market is very turbulent. So I think we have to take that into context too, right? This last week has been very turbulent, like the last 6 sessions. And if the stocks are holding, and that's the one good sign as well, is that some of these stocks, even though they're forming L-shaped pattern and so forth, they're trading tightly, and then that's always a good sign. Tightly right now doesn't mean it won't break down. It just means at least it's holding up right now for the moment. If there's something negative or macro-wise that could impact the whole economy, then these stocks will start to fall as well, right? Because that just brings the whole market down. But but at least this last week we're able to hold up. So but let's see. It's hard to say like what's gonna happen in the future. Apple, I saw on news that they're selling hotcakes iPhones right now, like hotcakes in China, sold out in many areas or stores or something like that. So that is a good news for Apple. So it jumped up pretty nicely here on Friday. So this one is still near new high, despite this recent pullback. So again, this was kind of came down hard on one day and found support here, and then now it closed at the week's high here, which is really interesting, right? So that's what I like about this chart right now. Another stock that's acting kind of interesting as well is Tesla, and Tesla, got tested here as well on that one Friday, hitting below the pink line. But again, the good thing is, even though they're all kind of doing this L-shaped pattern, but the good thing is they're kind of holding tight, and then this one, same similar to Apple, it kind of closed at the higher range for the week, and even closed even higher than most of the days here. So that is really good sign. Uh, but if it does move above this line right here I just draw, it's probably better, because then that really decisively clear all this range here. So that would be definitely a position possible. And again, Tesla is reporting in 4 days, so that will make a big move for Tesla. Here's Netflix, same thing, is reporting in 3 days. It's been very tight, very similar action. This one trying to bounce from the bottom, so that is actually making an advance ahead of the earnings. And then recently it pulled back, And Thursday, I'm not sure if there's news or something, but it definitely fell below the short-term moving average right here, around 1200, before bouncing back on Friday. But most likely, again, some of these stocks are going to wait for the earnings to see what's going to happen. Most people probably won't make big bets at this moment, especially with some of this turbulence in the marketplace. So yeah, so we'll see how Netflix and Tesla turn out this week. Earnings seasons are officially beginning. Bank earnings, they were better in general. They were better than expected, but like I said, it didn't really spark a move in the financial area, which is really weird. XLF here you can see it just didn't move the needle at all with all this negative news in the credit market for the private industry. Thank you all for watching. Hope you join me in the next growth stock list video. Bye bye, and please like and subscribe.